Bismillah ar-Rahman ar-Rahim. Assalamu alaikum and good afternoon, everyone. Welcome to Muscat Securities Market, to yet another discussion session of one of our listed companies. Before we commence the session, we have a short announcement and a query, basically. As you're all aware that we used to host these discussion sessions at 1:30 previously, and since the trading hours have changed, we have changed the time to 2 o'clock from 10 to 2. This is why for the brokers to participate in these sessions, we have started organizing them at 2:30. However, in the last session, which was our first session, some of you had a comment that you can still be willing to come here at 1:30. So we are going to distribute a small questionnaire. Please feel free to fill in your preferable time so that we can organize these sessions at your convenience. So now to commence the session, for Al-Anwar Holding, first of all, we would like to welcome the team, the panel from Al-Anwar Holding, Mr. Khalid Ansari, their CEO, Mr. Sanjay Tiwari, their CFO, Mr. Manish, their investment manager, and Mr. Mubarak, who has been very supportive all the years here organizing this session. The session, as usual, is divided into two parts. One part presentation, talking about the company's particulars, and second part will be Q&A. So we invite Mr. Khalid Ansari for the presentation, and then the floor will be open for Q&A. Thank you.
Assalamu alaikum. On behalf of Al-Anwar Holdings, it's our pleasure to today give you a quick overview of what Al-Anwar Holding is all about, what we have done so far, what's our financial plan, and how the company moves forward. And then we'll have a question and answer. So let me start off by just recapping what Al-Anwar Holding stands for. We have, our vision is to be a leader amongst the investment companies in the region. And we follow a private equity model. So we are an investment holding company which follows a private equity model. And our mission is to ensure that we create value long term, we enhance corporate governance, and we focus on execution of our operational excellence. That is depicted by our, the standards, which we want the leader private equity model, and we have certain pillars which we follow consistently. It's an investment holding company listed in the stock market, but follows a private equity model, which effectively means that we buy into companies, we enhance the values, we grow the company, and we exit. Our profit and our super profit at times comes by making sure that that is done successfully. Buying into companies, increasing the value, and making an exit. So that's our overall concept, and that's the philosophy we follow. If you look at our approach, we seek new opportunities. We look at growth capital. We look at buyouts. We have been into greenfield ventures. And we look at distressed assets which are having a problem. We think there's a potential, we go and buy that. And once we have done that, we do our value addition. And our value addition is primarily looking at the operational efficiencies of each of these companies, ensuring that we benchmark against the production or the various services, increase the value, create some sort of dynamic competition, and provide a strong management support. Having done that, we would expect that those of our investments increase in value, and we have various options to exit. One is a stake sale. Some of the companies we sell our full stake. Sometimes we've been to IPO where we have cashed in, and we also look at swap and mergers. So that's the model we follow. In terms of our strategy, we have certain areas where we focus on and certain areas where we do not go. For example, our private equity and PIPE model, we look at sectors which are financial services. Insurance is one of our sectors we look at. We look at education and training. We look at healthcare. we would look at oil and gas services, and we are heavily into manufacturing. And within the manufacturing, we have food and beverage, energy-related, and building material-related. So these are the companies our targets market. At the moment, for the next 3 years, the market which we are not going to be looking at is information technology, retail, funds, and real estate. So we have said, look, let's park that on one side. For the next 3 years, we focus on this one. Also, in the next 3 years, our strategy is we're only going to focus in Oman. Although we have had investments abroad, but our strategy is to focus Oman because there's a lot of growth opportunities in Oman. There's a lot of challenges coming which we want to capitalize and grow. So our focus is Oman-based companies. And we look at MSM-listed companies to make sure that these companies have a transparency, they've got a historical records of profits, etc. We look at the top stocks. We compare our business model and we capitalize on price and value disconnect. So we look at companies which has got underpricing and has got a bigger value. We go in and try to make value out of it. So in terms of our cornerstone of our investment strategy for the next 3 years, what are we going to be doing? We'll be ensuring that we have sustainable operational improvement of investee companies. Once you look at our investee companies, you will see that we've got quite a nice list of companies which are doing well. But with change in technology, with change in market dynamics, with change in economic environment, most of the companies would need to ensure that they are upscaling themselves so that they're continuously on the path of growth. And that's what one sector is. We'll focus on those companies. The second cornerstone which we have is we want to monetize some of our investment. We want to unlock values. If you look at our investment portfolio, the investment portfolio has grown over the years. It has some very good potential, and perhaps the carrying value of those investments are not fully leveraged. So in the next few years, we'll be looking to monetize some of them and unlock the values for the shareholders. And the last but not the least is effective cash management. You see, because of the economic challenges within Oman, outside Oman, we want to make sure that we don't get into a cash trap or a debt trap. We make sure that we are balancing our investment against our borrowings so that we are able to meet the cash flow requirements of the banks, at the same time meet our own cash flow requirements. So that's Al-Anwar's background, our strategy, what we want to do as a company, and what's our way forward. Let me give you a bit of a history of where we are. If you look at, we've had now, I apologize for the graphs. People sitting in the back may not be able to see the whole lot. But if you look at our growth of our consolidated shareholders' equity, in 2006-07, we were 11 million. In last year, 17-18, we were touching 36 million. So there has been consistent growth in our shareholders' value, shareholders' equity. It has grown over the years because of the profit, because of the retention of the profit, and it's a nice steady curve up. So that's shareholders' value. If you look at our profitability, it's an interesting graph. It goes up and down at times. Yeah. So for the last, since our graph from 2010-11 has been continuously going up in terms of profit. We've had 1 year, 2010-11, where we had losses of 1.2 million real. And that was primarily, we had to make provision for 2 investments. One was in India and one was in the other part of the Gulf because of the value drop, etc. But over the years, our profit has, been as low as 500,000 to as high as 6 million real. If you analyze the profit, the bulk of our profit is coming because of the divestment. And that's where our success is. Over the years, we have divested some of the big companies like NAPCO. We were one of the shareholders. We divested, we make money. And that happened, back in 2006-07, for example, we have invested. We IPO'd a company called Voltamp. We booked capital gains in those. Then we had an exit of some of our smaller investments. we made money. We had Tajir Finance, where we got in, grew the company, exited, built in a profit. We had an IPO of Al-Maha in one of those years, which made a good profit for us. We've had some capital gains tax relating to the Ominvest sales. For the last 2 years, we were buying Ominvest and we have exited. So our profit in relation to our, one is our standard income and expense, but our real profit comes when we make a big exit. And that's a cycle. Obviously, that cycle depends on a number of things. One of them is the stock market condition itself, the economy, and the opportunities which we get. So, if you look at our 6 months or 9 months result, we almost break even a small loss. And the reason is that we have not had any divestment yet. Okay? So the moment a divestment happens, you see a jump in our profit. So that's our profit profile. Last year, year before last, we not divested, but we had an IPO with Falcon. Arabian Falcon, a company was formed, and we went IPO, so that also gave us some profit coming in. And for the last 2-3 years, we have been slowly, selling off Ominvest, and eventually we sold off all last year, so we booked a lot of profit. So our profit trend is very cyclical. Another interesting feature to note is the stock market. If you look at the stock market, if you look at a 10-year correlation, there is a correlation between the crude prices. There is a time lag between what the crude price is doing and what the stock market is doing. So at the moment, the graph is going against the crude price, although crude price is going up, but the stock market still has not recognized that, and it's still not, the recovery has not happened. So we are in the market. Some of our investment, as you'll say, are very market related. They're valued at the market. So if the stock market is going down, obviously there will be a pressure on our balance sheet. So that's the one. If you compare how we have done last year, the first chart, if you look at in 2015, the market performed -14, we were 3% up. In 16, the market was 7%, we were 32%. In 17, the market was 11 negative, we were 13 negative. Last year in 18, the market is 15 negative, we are 32 negative. So we are, partly linked to the market also. So our performance goes up and down. But if you look at the second graph, very interestingly, if in 2014, if we bought at the benchmark of 100, where the market was 100 and our price was 100, over the years, you see the graph, we have performed slightly better in the stock market. Some years we were higher, some years we were lower. So that's our relationship with the market. We are in the market, and it's a company which does get affected with the market price going up and down. Now, so that's a little bit of background about how the market environment we are working in. Look at our group structure. This is our group structure. The model, the private equity model is we own 25, 35% in that range. Very few companies we 100% we're owning. Okay, so our model is to own a chunk where we can make a difference, but we're not 100%. So we have got 3 subsidiaries. One is called Anwar Hospitality. That's a company which is 100% owned by us. Currently, we're developing a hotel, a Novotel brand hotel near the airport. And the idea is that at some stage, we will divest after having reached a certain point. There are 2 other companies which are international in development. Those are, again, companies which have got very little activities, and they're there to promote a project, and then eventually it gets divested. Our bulk of the businesses are associate companies. We've got Voltamp Energy as one of our associates. That's a company which the Al-Anwar has had shares for a long time, took it to IPO, got some value out. Then our other associate companies, Al-Maha Ceramics, The third is Arabian Falcon Insurance Company. Then we have Al Rawad International School, which is not listed in the stock market, but it's a SAOC company. Then we have stake in National Detergent Company, which is again a listed company. We have a company called Hormuz Al Anwar Cement, which we signed with an Iranian company a few years ago to set up a small cement factory in Duqm. At the moment, because of the economic environment, etc., is on a slow mode. Not much is happening on that. Then we have a National Biscuits, which is also a subsidiary. Then we have a cluster of investment, which are investments which we call it at fair value. These are the investments which are not our associate, i.e., under the definition, we do not have board seats or control or some sort of a significant control. So these are investments at fair value, we call it, but some of them are pretty sizable investment. We have investment in DIDIC, the Foreign International Development. We have investment in Oman Chlorine. We have investment in Al Mons Securities, which is a company listed in India. Then we have investment in Sun Packaging, and we have a Ominvest perpetual bond. As part of the exit, we had certain bonds in there. So that's the group structure. If you look at some of our strategic investment, you see some very good names. Our strategy is that wherever we invest, it's got to be number one or number two in the market. So most of our companies have that. We're either number one or number two. If we're number three, then we try to become number two. So we want to make sure that that's the leading, so that our asset base is protected. So that's our key strategic investments currently. Now, what does our investment look like? I give you a very simple snapshot, because you're experts, analysts, and market-related people. If you look at this graph, it tells you our snapshot of where we are. Our total equity is 33 million real. I'm talking 31st December 2018 numbers, because that's the publicly available number. So at that date, our total equity was 33 million real. Our total investment in our books was 54 million real, and we had a debt of 21. So our model is our own equity, we debt, and we buy an investment. That's the model. And that's why when we said cash is critical, we want to make sure that the debt equity, we maintain that ratio very tightly. Otherwise, that's the thing which can go on. Then we are focused on clusters. We look at businesses as clusters because over the years, Al Anwar Holding has developed expertise in certain clusters, and we want to make sure that that expertise is used for the clusters to increase the value of the clusters. So our manufacturing cluster is currently about 38% of our portfolio is in manufacturing. It's about 20 million real sitting in that cluster. Most of the companies are listed in the stock market, one or two are small ones. Yeah. Then we went into education. So there's an education cluster, which is about 4.5 million real, which is Al Rawad International School. Then we are into financial cluster, which comprises of the insurance company and investment in DIDIC. Also, we have a fixed income at the moment, 13 million real, which is the bonds, which are Ominvest bonds, which is giving us a return of 7.75%. So that's about 24%. Then there's a hotel project, which is almost 2 million real. We got a surplus cash of 4 million real. Obviously, the idea is that we are in the market looking for companies to buy companies. That's why we have got this cash, because we believe as a company that there are some good opportunities in the market, and this is the time to pick up some investment. So we are ready with cash. So that is our cluster, and that's how we manage. If you look at the results which were disclosed last, I think couple of weeks ago, this is against the 9 months. Our year end is March, so you get the full result at the end of March. The two big swing has happened in our profitability. One is last year we had a gain on sale of investment of 4.4 million real. That is primarily the Ominvest sale. So we made a big gain there. So that is missing this year, so our profit is down. And also, if you look further down, one of our associate companies has not done that well. If you look at Voltamp, was last year 500,000, it's only 2 million. So that has caused this shift in our profitability. If you look at our asset, our balance sheet, we are Investment in associate, 22 million real. Is investment at fair value, almost 25 million real. You got some cash, about 4 million real, a small receivable here and there, and our asset is 2 million real. Out of 2 million, the bulk of it is land on which the hotel is going to come. So it's a land. So most of the assets are good assets. Most of the companies have good, solid asset to back it up. If you look at our equity, it's 33 million real compared to 35 of last year. And our return earning as of 31st December was 9.8 million real compared to 12.6 of last year. So we got a good return earning to do that. Our net asset per share is 166 paisa compared to what the market is today, is 96 at December. It's plus minus like that. That's the comparison. If you look at our assets portfolio, and that will be of interest to all of you, if you see the companies and the amount of value, it's all solid companies. And the distribution is quite wide, so there is no concentration on any of assets. For example, Oman Chlorine, we own 15%. It's 6.2 million real. Voltamp, we own 24.6%, about 5 million real worth of investment. National Detergent, we own 25%, 4 million. Al-Maha, we own 23%, almost 2.7 million. Sen Packaging, it's a small investment. We divested quite a lot. We left with a legacy 11%, 300,000. And Nabil Biscuit, 29. So if you look at, it's about, good spread of investment in there. On the financial, because Almonds, which is a company in India, is almost 11.9%, and that's about 390,000 real worth of carrying value as mark to market. Arabian Falcon is 22%, which is 4.3 million real. We got Didic, 6.6% of 4.5 million real, and there is other small, 162. And we got 21% of the bond, the Uminvest bond, which is 13 million real, which is a fixed income bond. Then we have a school, 4.5 million real. We own 43% of that. And as I said, most of our investments, we are not 100%. We are 20, 30, that, so that we spread our risk. Yet we are able to sit in the board and make a difference. Hotel is a green field. That's why it's 100% at the moment. And obviously, once the project moves forward, as part of our policy, we will divest and book some capital gains. So this, in summary, is the snapshot of Al-Anwar Holdings, where we are. Thank you very much for listening. These are my contact numbers. We are available. We're a very transparent company. If there's any question, just call us or send us a message. We are available for any questions and answers. Feel free to ask any questions. I hope this slide was readable from the back. If not, we'll request MSM to have a bigger slide next time. Yeah? Yes.
Good afternoon, gentlemen. Thank you for the presentation. I have a couple of questions. The first one is in the last management discussion analysis report, which you have published. You have said about diversifying further the portfolio. Can you throw some light on that? What are the sectors that you're looking at, and how are you planning to fund?
You see, in diversification, if you go back to that slide I showed, health sector is one we looked at, and that's on our agenda. That's one diversification. The other one is within the manufacturing, we have got oil and gas. We got Oman Chlorine as oil and gas, but we want to have more oil and gas related entities, which are manufacturing entities or surfaces, and to increase the portfolio size. So that's what it is. But as a model is, we are always looking to buy and sell. So at the moment, the main clusters is manufacturing, financial services, education. Health is being looked at as options, and within that there are, hotel is a one-off. We will construct and look at it.
I've observed that the leverage of Anwar Holding is at historically high levels, 0.6 times or 2:3. So what's your strategy for that, and what level are you more comfortable with?
See, our debt equity is 0.64.
Correct.
You know?
Correct.
Yeah.
2:3, but historically, Anwar Holding has a liquid balance sheet, and it has the average debt was close to around 10 million. Now we are talking about net debt of 17 million.
Yeah.
So what level should we be looking at, and what level are you comfortable with?
We will not cross 1-to-1, debt equity 1-to-1. That's the maximum target we have. So our maximum is our debt and equity 1-to-1. So 30 million. But that is if we get a very aggressive and interesting portfolio, we go. But that's the outer limit. We'll never cross that limit.
Thanks. Can you throw some light on the status of these two projects? One is the cement project, and the other one is the hotel project.
The hotel project is, let's start with the hotel because that's an easier one. It's got the Ministry of Tourism approval, the initial approval. There's a whole series of approvals required. So one landmark we have crossed, which is the Ministry of Tourism approval for the building, which is if you're driving towards the airport, there's a shell filling station. Just before that, there's a nice piece of land. It's on the main road. The hotel is going to come. We have a tie-up with a group called Accor, and their brand called Novotel is what we are looking at. So it's at that stage with MOT. I think few approvals from ROP, from Civil Defense, and others are coming. So we should be progressing pretty quickly now.
What's the time and budget?
Budget, I cannot share with you at this stage because we've still not done the detailed drawing. But you can calculate, it'll be 180 to 200 room hotel, 4-star. So, you can take a guess.
So how many rooms?
Between 180 to 200 rooms. Yeah, it's still not, those are the final details we'll have to look at. So it'll be a business hotel, on the main road, very close to the airport, I think 5 minutes to the international airport. Yeah.
So any idea on the time?
The time frame is that if the approval, etc., comes through pretty quickly, so you're looking at another 3 months to do RFP for contractor. And the plan is that once we select a contractor who's done a hotel, is to give some incentive for an early completion. Normally the hotels are taking 18 months to 2 years, but given sometimes if you give some incentive for early completion, maybe you get it quicker. Yeah.
And on the cement factory?
Yeah, sorry. Cement is, it was a joint venture. If you look at our last reports, etc., it's a joint venture with an Iranian company. So we are 40, Iranian company was 60. Because of the economic, challenges coming out of various things happening around us, that project is slow because the transfer of fund, etc., is not that easy out of Iran at the moment. So that's on a slow pace at the moment.
Thank you very much.
Thank you. Yeah, please.
Hi, good afternoon, gentlemen. Mr. Khaled, I had a question while you were giving in your presentation. You mentioned that your focus is on Oman per se for the foreseeable short-term.
For the next 3 years, yeah.
For the next 3 years. It's just that what are the sectors that do you find really attractive if you're considering Oman?
Yep.
And why is it that it's Oman?
For 2 reasons. Because of so much uncertainty around outside Oman, we don't want to take a risk at this stage. It's better to know your home territory and your home market. We are much more comfortable here. The risk of things going bad and trying to recover in Oman is much higher than if you are in a much bigger market where we are just a tiny. So, if you look at it, we're only about 50 million real investments. If you go to a big market which has got multiples of billions, we're a drop in the ocean. So we don't want to be, totally drowned. So we want to be in a market which we understand. That's number one. Secondly, if you look at the Oman's growth plan, etc., there's a lot of activity within Oman also planned. There are, be it Tanfeed, be it manufacturing, etc. So there's a lot happening here. So we have taken a position that, okay, let's focus on Oman, build up some quality business here and make some money and then look after later on. The other aspect is that our funding also has to be, the banks have to be comfortable with us. So if we go into a riskier market, the banks are not willing to come with us. If you look at our model, out of the 50, 30, about 18 or whatever, we got funding. And if you want to go further up, the banks are not willing to go cross-border or across overseas. The sectors are obviously manufacturing will continue to be our focus. And within manufacturing, there's a lot of opportunities we see because of the distress, because of technology coming in where we can actually take a couple of companies and put them together or do various things with it. Yeah? Improve the management, use digital technology, use the bigger markets around it and make full use of its capacity. Yeah? I'm sorry, I think something has happened here. Yeah? So our sector is manufacturing, yeah, and financial services, education. These are the three clear sector. We bought one school and we want to grow that in such a way that we end up with a series of schools. And then make sure that you have from day one right up to have a tie-up with the university. So a student joining our school system would know that if I join Al-Anwar group companies, which is Al-Rawad International School, I can end up with a university somewhere else. So that's the sector. And obviously healthcare is another we're looking at, but these are primarily the three sectors we're looking at.
Thank you very much for the presentation, Mr. Ansari. I've got a question and an observation, if you'll indulge me.
Yeah.
Now,
please.
Anwar, I actually saw the slide with the correlation to the MSM market quite closely. And what has happened is you guys were a company that was generating consistently in the 3 to 4.5 million profit range. The quality of earnings, it varied. Like obviously the last year, there was a lot of investment gain that came from Home Invest as well.
Yep.
But now going forward, you're obviously reporting a book value of close to 166 when your share price is 90, 95. But if you look at your current investments, the kind of ROIs they generate, and I don't see any of these investments, if you look at the net profit that they generate in terms of over your carrying value, over the company's overall value, there's none of them actually generating more than 10%. In fact, on average, they're lower than that. Yeah. Even if you look at, if let's assume that, the Oman Chlorine, the National Detergents, all those companies that you bought as part of the Home Invest stake sale, if they were to become an associate, so that earnings would flow through. Even these companies together don't really generate high ROIs. So in no way can I look at next 3 years or under holding and see that you guys going back to the 3 million, or 3 million is an arbitrary number, but it means 10%
yep.
approximately ROE on your equity base. So my point is, if I had to look at your earnings, and given that you guys are not slave to market movements, in the past, a lot of investment companies in Oman typically, go up and down in value because their earnings are also in relation to, their investment portfolio holdings that they have. Most of them were fair value to P&L. In your case, that's not the case. You got mostly associate companies.
Correct, yeah.
So I don't see any visibility when it comes to earnings from you guys where you can clock 2.5 to 3 million. Or am I being too pessimistic? Is there a plan? And even
No.
the second part I relate to is you said some years you do well because of divestments. But even if you look at your carrying value of these companies, and if you have to look at the market reality right now, I can't imagine in most of these cases you'd recognize a big profit on divestment because your carrying value is already capturing a high valuation, which is not the case right now. You name it, any company you have it, these companies are reflecting higher carrying values than what the market price would dictate.
Yep.
Where is the earnings going from here? And in some ways, is the market right to price you at 0.6, 0.7 price to book? Is one price to book not a fair value for you, given that your carrying value is a lot higher than market realities? I mean, if you'll just indulge me and just...
Yeah, if you look at it, if you look at if you fair valued all our investment, even then our breakup value is much higher than what the market is doing.
Okay.
If you take all the investments which we have, yeah, you took a fair value of that, you'll find our investment would be, we are 35% discounted. This morning I was calculating, if you took just the fair value of all these listed investment, our book should be 131. Even despite, taking a beating of the market. And most of these companies are, taking the beating. So the market obviously is not recognizing the inherent value of ours. So on a mark-to-market basis, we'll probably should be 131. Our book value is 166 because of the way we account some of the associate. And market today is trading at 89 paisa. Okay, so that's number one. Secondly, you're right. If you look at the portfolio, what can be done here? Two things can be done here. Most of the companies are mature companies at the moment. There are startups. And there comes a cycle in any company, in any manufacturing, where you need a stagnation. You need to do something different to make sure the profitability goes up. So our strategy is to make sure that all these companies where we have a say increase their profitability by doing various things, by looking at their overall costs, by looking at the management, by looking at the financial structure, by looking at new market, by looking at divestment of some of the activity or merger with the competition. There are so many activities where one actually tries to increase the value. Our real capital gain comes if you sell one of those, and that's what it is. Obviously, that depends on the price, and given that today's price is not the best time, so we are holding back. But in the next couple of years, there will be some sale for sure, because people look at our investments from within Oman and from outside Oman and say, look, here's a strategic piece. Can we look at it? And if something like that comes along, that your 2-3 million real comes automatically. So that's the, yeah.
Just allow me one more comment. Thank you very much for the clarification.
Sure.
Anwar Holding has always been in the cusp of being one of the most sort of investor-savvy companies in Oman. And shareholder value maximization, we've learned about it in the theory, but you guys have followed it. And the moment you tell me that the way you look at it, on a liquidation value of 130 paisa, and your stock price is 90 paisa, and when I see you, who've not been reluctant in the past to go and sort of start a buyback program, and currently, when I see Anwar Holding going in the market and buying chlorine or buying Didig, it sort of begs the question from me, at what point do you decide that, if on management basis, you are saying that your liquidation is 130, the stock price is 90, and it's not like you're not savvy enough not to consider a buyback? Why not look at a buyback versus going and further investing in portfolio companies? Or even companies like Didig, for example, where you don't really have 10%, 15%, where you're on the board, you have some say, which has always been the case with you guys. You've never been a portfolio investor. You've always been a strategic investor. Yeah. So how do I reconcile your fair value with the cash that you have available and not considering the possibility of buyback, if you'll indulge me? Thank you very much.
Buyback is a very complicated process, as you know. If you start the process of a buyback, it takes quite a bit of a time. I think a few years ago, we tried that. The market automatically moved to that price, so we just had to abandon it. Okay. Was it 2010? 2010, there was a buyback option. We went, disclosed a price, and then by the time we got the approvals, etc., because it's not a simple process. You got to, first the board has got to approve. The moment the board approves, you got to inform the market. So the moment you inform the market, the price starts moving. And by the time you get the regulator approval and the extraordinary general meeting and all that, 5-6 weeks have gone. So you already crossed that threshold. So, that was our experience in 2010. So hence, we have to think through what is that the best option.
We'll be very happy if the experience happens again. We said 130 paisa, the stock will move up. I'm sure all of you will be happy about it.
Well,
thank you.
Thank you. Yeah, please.
Hi. Since you sit on some of the board of those companies, so probably you can add some, add value to our knowledge more. I have a question related to Voltime. What went wrong with Voltime in 2018? Second question, Arabia Falcon, they just went for an IPO. You just did the prospectus estimates. Your actual performance is below the estimate. So again, a question on Arabia Falcon. What went wrong with Arabia Falcon and what's going to happen? Where do you see or where you want to take Arabia Falcon? Lastly, again, can you please show one?
Yeah, it's just the technology is...
the Hormuz cement.
Yeah.
I see everybody right now is going into cement. Oman Cement is expanding. Rasool Cement wants to acquire. There is 4 to 5 million tons of cement coming from UAE.
Yeah.
And there are at least 2 to 3 private players who are going into cement. Is there really a demand of cement so much in Oman available?
Okay.
And why everybody is looking at cement? So three
Okay.
questions.
So let me start with the back one, cement. Yeah. Our strategic partner was an Iranian company. So they have come into Duqm, which is a free zone. So obviously that company is one of the largest manufacturer of cement. So there is a whole market. So the feasibility of that project was on the basis of almost everything exported. So it wasn't local market. And if there was a demand in the local market, we would have met that. So that's cement. So our project was slightly different because there's a foreign owner who already has a big market. Okay. So, and because of the economic situation, that's on a slowdown. Coming back to your question about Voltamp. Now, Voltamp is a publicly listed company, so I don't think it's appropriate for me to talk about that company's performance because they've already declared their accounts. The market environment has caused it. If you look at the director's report, it's the market challenges, new entrants have come in, and that happens, every now and then. So they recognize it. If you look at the report, they're taking some action, and they will get back to. It's a solid company with a solid background, past, a premier producer of transformers. So it should not be a problem forever. Falcon, yes, went public. Now that it's gone public, I think there is a new set of management has come in. There are new CEOs, so the company is changing its direction, and we see a good future for Arabian Falcon. You will hear some good news in the market in terms of the sort of thing they're doing. So Falcon is a company we want to continue with for some time.
The point is there anything you can share that what is the direction of those companies of Arabia Falcon, where they are looking to expand, which sector they are looking into?
They're looking at, again, it's a listed company, so I don't think it's appropriate for me to talk about another listed company where we only own 25%. So I will leave that question to Arabian Falcon. But we as a holding company investor, we have a lot of hope and faith in their direction. Yeah? Yeah, please.
A few more follow-up questions.
Sure.
Follow-up to what Abbas was asking. Can you throw some light on the accounting standards which you are going to adopt? IFRS 9 is coming up, and you have Oman Chlorine, which is AFS investment, which is maybe it could be now reclassified into associate. So can you throw some light on the IFRS 9 adoption, and what could be the impact on that? And second, Anwar Holding has been giving, rewarding the investors with a lot of cash dividend. So what's your outlook on the dividend as well?
Okay. Easier one, the dividend outlook. Just wait till we close our year end, which is in a month's time. 31st March is our year end. And after that, it's information I cannot say yes or no, because you would appreciate it's a very price-sensitive information, so I cannot comment on it. But our year end is 31st March. We'll look at our results at the end of the March, and we decide the way forward. In terms of accounting, we've not gone for IFRS 9 totally mark-to-market basis. See? So, IFRS 9 gives an option to companies which are for example, what Didic has done, everything is mark-to-market today. Yeah? So we are not, we are a holding company. Wherever we have associate, we do associate accounting. Okay? So that continues. Associate accounting is our share of the net asset plus the profit minus dividend, plus any goodwill embedded in that. So we do associate accounting for those investments which are associates. So let me take you back to that. Yeah? So that cluster of associate has associate accounting in the middle. Subsidiaries are line by line, so we do line by line consolidation. The third block is fair value, so whatever is the market value is fair. So obviously, if some investment moves from that block to associate, there are accounting rules to transfer from fair value to associate accounting, which we will follow. If you look at our accounts, I think in September, Nabil Biscuit was in the third block. So it moved to associate now. Yeah, so we'll follow that, but we're not going to be everything mark to market. Yeah.
Thank you.
This is somebody. Sorry? Sure, okay, no problem. Yeah, the tea's getting cold, is it? Yes. Okay, fine. Yeah, last question, the tea is getting, I've been told by the lady the tea is getting cold, yeah? Sorry. But, we'll be available after that, so, just. No, not at all. The whole idea is to, share with you what we are, yeah.
Hello?
Yeah.
Yeah,
it's working.
So based on a listed company that carried out an impairment exercise on one of the associate companies due to a drop in market performance, company performance as well as market price. Without getting into names, now, do we see a similar exercise that might be followed here or circumstances that would lead to a similar exercise being followed for your associate companies? If you could just throw some light on that. I mean, we've seen a drop in, market performance as well as company performance. So just wanted to, if you could shed some light on that.
Yeah, thank you. I think that will happen to some companies if they have impairment-related issues. Now, most of our companies, in fact, all of these companies are December year-end. So they've gone through the process. So luckily, none of these companies have been subject to any severe impairment. An impairment would come for a number of reasons. You're a better analyst than myself. If there is a technological change of the plant and machinery, like some of the companies have disclosed a huge impairment in the power sector, if you have seen, because of the technological issues or discontinuation of a certain. So that would be one. Secondly, the companies have got serious losses and continuous losses. Now, that touch wood, our portfolio is good. We don't have any companies which have got serious losses or and serious losses mean in the continuation of 2-3 years of continuous losses, then impairment kicks in. 1 year up and down, it's not an issue. So we're okay. And hopefully, in a month and a half, or less than a month, slightly more than a month, we'll close our books and we'll make sure that the real is out very quickly, yeah? Yeah. Thank you very much for your patience. I know most of you, but those of you who don't, I'm available anytime. We are operating in CMA, and we adhere to the CMA Code of Corporate Governance for being very transparent. In the past, we have won award for being the most transparent companies. We want to continue that. So you're always welcome to come and meet us. Do visit us in our head office in Shati Al Khurram. It's not as big a building as this, but we're a nice little office. We'll be happy to share information with you, whatever is available in the public domain. Thank you very much. Yeah. Thank you.
Thank you, Mr. Khalid, and your management team for coming and conducting this session. Thank you all for participating, and we'll see you all soon in our follow-up sessions, inshallah, with other companies. We will make the announcements shortly. Just outside, we have arranged for some refreshments. Please help yourself. Thank you. Masalama.